What a momentum trade for the yellow metal. Gold has now risen, Tom, over 20% since the dovish shift from the Fed back in Jackson Hole back in August. In just 6 weeks, added 20%, crossing 4,000 for the first time ever.
Gold has done it again, smashing past $4,000 an ounce for the first time in history. It's a rally that's grabbed headlines around the world, and many are quick to point the finger at one man, Donald Trump. With his return to the White House, new tariffs, clashes with the Federal Reserve, and global uncertainty, gold has surged like never before. But here's the truth. This rally isn't just about Trump. It's about something far bigger. A world losing faith in its own financial systems. From central banks stockpiling gold to investors fleeing risky assets, this isn't just a price boom, it's a signal. In this video, we'll uncover why gold's historic rally runs deeper than politics and what it really says about the future of money. Chapter 1. Trump's Economic Earthquake. When Trump stormed back into office, markets were ready for turbulence. Within weeks, he imposed massive tariffs, up to 100% on drugs, furniture, and imports from Asia, reigniting trade tensions and sparking fears of a global slowdown. He blamed the Federal Reserve for being too weak and hinted at replacing senior officials. That combination, when trade war meets monetary war, made investors nervous. And when markets get nervous, they look for safety. Gold became that refuge. Its price climbed with every new tweet, every new tariff, and every new press conference. But while Trump may have triggered the spark, the fire was already burning underneath the global economy. Chapter 2. The Real Fuel. Global Fear and Fragile Currencies. Beneath the headlines, something deeper was driving investors into gold. A crisis of confidence in paper money. Over the past decade, governments have printed trillions in new currency to fund stimulus, wars, and social programs. Inflation hit multi-decade highs, and national debts soared to record levels. From Washington to Tokyo, the world's biggest economies are buried under more than $300 trillion in global debt. When money itself feels fragile, gold becomes more than a commodity. It becomes a vote of no confidence in the system. Investors don't buy gold because it yields profit. They buy it because it doesn't lie. It's finite, tangible, and immune to political spin. Chapter 3. Central banks join the hunt. For years, central banks treated gold like an old relic. Now they're hoarding it like treasure. Countries like China, India, Turkey, and Poland have been buying gold at the fastest pace in modern history. Why? Because they no longer trust the dollar-dominated world order. As sanctions, trade wars, and digital currencies reshape geopolitics, nations are racing to diversify their reserves. And gold is the ultimate insurance policy. The People's Bank of China alone added more than 300 tons of gold in the past year. The Middle East followed suit, using oil profits to build golden safety nets. Together, these purchases have created a floor under prices, meaning that even if speculators sell, central banks keep buying. This isn't a short-term trade, it's a long-term strategic pivot, one that signals a world preparing for the next economic era. Chapter 4. The Fed Factor. When interest rates fall, gold rises. Gold has no yield. It doesn't pay dividends or interest. So when rates are high, investors usually prefer bonds. But with global economies slowing down, central banks, including the U.S. Federal Reserve, are signaling rate cuts. Lower interest rates make gold more attractive because the opportunity cost of holding it disappears. And with inflation still sticky, investors believe the Fed's hands are tied. They can't raise rates aggressively without crashing the economy. That delicate balance, high inflation, low real returns, and weak confidence, is the perfect recipe for a gold surge. It's not just a hedge, it's an escape route. Chapter 5. Geopolitics and Chaos, the Perfect Catalyst. Wars, political unrest, and uncertainty are like jet fuel for gold. And 2025 has been full of them. The ongoing Russia-Ukraine conflict, tensions between China and Taiwan, instability in the Middle East, and energy crises across Europe all add layers of fear. Each new headline pushes investors to seek safety. Even natural disasters and cyber attacks have joined the mix, shaking markets in unpredictable ways. When the world looks unstable, gold becomes a symbol of stability, a quiet constant in a noisy world. As one analyst from Bloomberg put it, gold doesn't care who wins the war. It just cares that there is one Chapter 6, gold versus the dollar, the new rivalry. For nearly a century, the US dollar has been the backbone of global trade. But now that dominance is being questioned. America's rising debt, political polarization, and repeated government shutdowns have chipped away at the dollar's credibility. Some nations are openly exploring de-dollarization, trading in local currencies, digital assets, or gold itself. And as the dollar weakens, gold naturally strengthens. Since gold is priced in dollars, every slip in the greenback pushes its price higher. In essence, gold has become the anti-dollar, the mirror image of confidence in America's financial leadership. Chapter 7: The Psychology of Fear and Greed. Every rally has a human story. When gold started climbing past $3,000, analysts called it overbought. At $3,500, they warned of a bubble. Now at $4,000, investors can't get enough. But behind this frenzy lies two timeless emotions: fear and greed. Fear of losing value drives investors towards safety. Greed for profit pushes them to chase the rally. Together, they create a self-reinforcing loop. The more gold rises, the more people believe it will never fall. But seasoned traders warn that gold's strength isn't just about emotion. It's about long-term structural change. The world is moving toward hard assets, commodities, and tangible stores of value. In that transition, gold is the anchor. Chapter 8: Beyond the Hype, What This Means for the Future. So, what does this all mean? Gold's rally is about far more than a single presidency. It reflects a global shift in trust, power, and perception. It's about nations preparing for economic uncertainty, individuals protecting themselves from inflation, and markets realizing that the digital, debt-driven system we've built might not be sustainable forever. Even if Trump's policies or the Fed's actions cool down, the structural drivers, high debt, weak currencies, and political risk are here to stay. In a way, gold is no longer just a safe haven. It's becoming a main character in the story of modern finance. Gold's rise is not a coincidence. It's a message. When trust in institutions fades, when inflation erodes savings, and when leaders wage economic wars, people turn to something timeless. Gold's rally isn't about Trump, Biden, or any single event. It's about an entire world realizing that power, money, and stability are shifting. So, the next time you see the gold price climbing, don't just ask, how high will it go? Ask instead, what is it telling us about the world we live in? If you found this breakdown insightful, don't forget to like, share, and subscribe to the channel for more deep dives into global economics, politics, and power shifts shaping our future.